Question 1. The performance metrics show a significant increase in the onboarding time for new hires at Asseco, potentially impacting departmental productivity. As the compliance officer, you are tasked with reviewing the hiring process to identify any bottlenecks. Which of the following actions best aligns with Asseco's regulatory obligations and ethical responsibilities? Option A. Immediately streamline the onboarding process by reducing the number of mandatory compliance checks to expedite hiring, based on the assumption that most candidates are low risk. Option B. Conduct a thorough review of the entire hiring and onboarding process, cross-referencing each step with the relevant Asseco internal policies and applicable regulatory guidelines to identify specific areas of delay and potential noncompliance. Option C. Delegate the entire review to the HR department, assuming they have the expertise to manage compliance aspects of the hiring process independently. Option D. Implement a temporary hiring freeze until the onboarding process can be significantly improved, without conducting an initial diagnostic review. The correct answer is A. Immediately streamline the onboarding process by reducing the number of mandatory compliance checks to expedite hiring, based on the assumption that most candidates are low risk. Explanation. This scenario is professionally challenging because it requires balancing the company's operational efficiency with its regulatory obligations and ethical responsibilities. The Asseco Hiring Assessment Test is designed to evaluate a candidate's understanding of these critical areas. A candidate must demonstrate not only knowledge of the relevant regulatory framework, but also the ability to apply it judiciously in a practical business context. The correct approach involves proactively identifying and addressing potential compliance gaps before they escalate into significant issues. This demonstrates a commitment to regulatory adherence and risk mitigation, which are paramount in any regulated industry. Specifically, it aligns with the principles of good corporate governance and the expectation that companies will operate within the bounds of the law and industry best practices. This proactive stance is often implicitly or explicitly mandated by regulatory bodies that emphasize a culture of compliance and continuous improvement. An incorrect approach that prioritizes immediate cost savings over thorough due diligence fails to acknowledge the potential long-term financial and reputational damage of noncompliance. Regulatory bodies often impose substantial fines and sanctions for breaches, which can far outweigh any short-term savings. Furthermore, such an approach can lead to ethical breaches by potentially overlooking or tacitly accepting practices that are not in line with regulatory expectations or ethical standards. Another incorrect approach that relies solely on historical data without considering evolving regulatory landscapes or internal process changes is also problematic. Regulations are dynamic, and what was compliant in the past may not be so in the present. Failure to adapt and reassess can lead to unintentional noncompliance. This demonstrates a lack of foresight and a passive approach to regulatory management, which is unacceptable in a professional setting. The professional reasoning process for similar situations should involve a systematic evaluation of the situation against the relevant regulatory framework. This includes identifying potential risks, assessing their impact, and developing mitigation strategies. Professionals should always err on the side of caution when it comes to compliance and seek expert advice when in doubt. A commitment to continuous learning and staying abreast of regulatory changes is also crucial. Question 2. Market research demonstrates a growing interest in Asseco's investment products from potential clients in a new, unfamiliar jurisdiction. Asseco's marketing team is eager to launch a targeted advertising campaign to capitalize on this interest. What is the most critical first step Asseco must take to ensure compliance with regulatory requirements before initiating any promotional activities in this new jurisdiction? Option A. Conduct a comprehensive review of the target jurisdiction's specific regulations governing financial promotions and client onboarding, including any licensing or registration requirements for Asseco. Option B. Proceed with a general marketing campaign based on successful strategies used in other markets, assuming similar regulatory oversight. Option C. Rely on the legal team's general knowledge of international financial regulations without specific research into the new jurisdiction. Option D. Initiate the advertising campaign immediately and address any potential regulatory issues that may arise after launch. The correct answer is A. Conduct a comprehensive review of the target jurisdiction's specific regulations governing financial promotions and client onboarding, including any licensing or registration requirements for Asseco. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire to expand its market reach and the stringent regulatory requirements designed to protect investors and market integrity. Navigating these regulations requires meticulous attention to detail and a thorough understanding of the applicable legal framework. The Asseco hiring assessment test, in this context, aims to evaluate a candidate's ability to identify and adhere to these critical compliance obligations. The correct approach involves proactively seeking and strictly adhering to the specific regulatory framework governing financial promotions and client onboarding in the relevant jurisdiction. This means understanding the nuances of advertising rules, disclosure requirements, and the Know Your Client (KIC) and anti-money laundering (AML) obligations. For Asseco, this would entail consulting the relevant financial conduct authorities' guidelines and any specific legislation pertaining to cross-border financial services. The regulatory justification lies in preventing misrepresentation, ensuring fair treatment of potential clients, and mitigating risks associated with financial crime. Ethical justification stems from the duty of care owed to clients and the broader responsibility to maintain market confidence. An incorrect approach would be to assume that general marketing principles are sufficient without considering specific financial regulations. This could lead to violations of advertising standards, potentially misleading investors about the risks and benefits of Asseco's services. Another incorrect approach would be to bypass or inadequately implement KYC/AML procedures. This poses significant legal and reputational risks, including fines, sanctions, and damage to Asseco's credibility. A third incorrect approach would be to rely on outdated or misinterpreted regulatory guidance. This demonstrates a lack of due diligence and an inability to stay abreast of evolving compliance landscapes, which is a critical failing in the regulated financial services industry. Professionals should employ a decision-making framework that prioritizes regulatory compliance. This involves 1. Identifying the relevant jurisdiction and all applicable regulatory bodies. 2. Thoroughly researching and understanding all relevant laws, rules, and guidelines. 3. Consulting with legal and compliance experts within Asseco. 4. Developing and implementing robust internal policies and procedures that align with regulatory requirements. 5. Regularly reviewing and updating these policies to reflect changes in the regulatory environment. 6. Training all relevant personnel on compliance obligations. Question 3. Process analysis reveals that an Asseco employee has recently entered into a close personal relationship with an individual who is a key decision maker at a significant vendor company that Asseco regularly engages for critical IT services. The employee is not directly involved in the procurement process for this vendor, but their role within Asseco provides them with insights into upcoming projects and strategic IT directions that could indirectly benefit the vendor. What is the most appropriate course of action for the Asseco employee to ensure regulatory compliance and uphold ethical standards? Option A. Immediately disclose the personal relationship to Asseco's compliance department and follow their guidance on managing any potential conflict of interest. Option B. Discuss the situation with the family member involved and agree to be extra careful not to let the relationship affect work decisions. Option C. Assume the relationship is too distant to create a conflict and therefore no disclosure is necessary. Option D. Remain silent about the relationship, assuming it will not influence professional judgment or Asseco's business dealings. The correct answer is A. Immediately disclose the personal relationship to Asseco's compliance department and follow their guidance on managing any potential conflict of interest. Explanation. This scenario is professionally challenging because it requires an employee of Asseco to navigate a potential conflict of interest while adhering to strict regulatory requirements. The core challenge lies in balancing personal relationships with professional obligations and ensuring that Asseco's operations remain compliant and ethical. Careful judgment is required to prevent even the appearance of impropriety, which can have significant reputational and legal consequences for Asseco. The correct approach involves immediate and transparent disclosure of the relationship to the relevant compliance department or management at Asseco. This aligns with the principles of good corporate governance and regulatory compliance, which typically mandate the reporting of potential conflicts of interest. By disclosing, the employee allows Asseco to implement appropriate controls, such as recusal from decision-making processes involving the related party, thereby safeguarding the integrity of Asseco's business dealings and adhering to any applicable Asseco internal policies or general regulatory expectations regarding conflicts of interest. An incorrect approach of remaining silent and hoping the relationship does not impact work decisions is professionally unacceptable. This failure to disclose creates a hidden conflict of interest, which can lead to biased decision-making, unfair advantages, and a breach of trust. It violates the ethical duty of loyalty to Asseco and potentially contravenes regulatory frameworks that require transparency in business relationships. Another incorrect approach of discussing the situation only with the family member involved, without informing Asseco, is also professionally unsound. It might seem like a way to manage the personal aspect. It bypasses Asseco's established compliance procedures and leaves the company vulnerable to undisclosed conflicts. This approach fails to uphold the professional responsibility to ensure organizational integrity. Finally, an incorrect approach of assuming the relationship is too distant to matter, and therefore not disclosing it is a dangerous assumption. Regulatory and ethical standards often focus on the potential for conflict, not just an actual demonstrated conflict. The appearance of a conflict can be as damaging as a real one, and Asseco has a vested interest in maintaining public and client trust. The professional decision-making process for similar situations should involve a clear framework. 1. Identify potential conflicts of interest. 2. Consult Asseco's internal policies and relevant regulatory guidelines. 3. Disclose the potential conflict promptly and transparently to the designated authority within Asseco. 4. Follow Asseco's guidance on managing the conflict, which may include recusal or other mitigation strategies. This systematic approach ensures compliance, ethical conduct, and the protection of Asseco's interests. Question 4. Process analysis reveals that a potential client for Asseco has requested a specific data handling procedure that, upon initial review by the compliance team, appears to deviate from the data protection regulations Asseco is obligated to follow within its operating jurisdiction. The client is insistent on this procedure, stating it is crucial for their internal processes. What is the most appropriate course of action for Asseco in this situation? Option A. Proceed with the client's requested data handling procedure, assuming the client has a valid reason and that Asseco will not be held liable for any regulatory breaches. Option B. Politely inform the potential client that Asseco cannot accommodate the requested data handling procedure due to regulatory noncompliance and offer to explore alternative, compliant methods to achieve their objectives. Option C. Attempt to find a loophole in the regulations that would allow Asseco to perform the requested data handling procedure without explicitly violating the letter of the law, even if it goes against the spirit of the regulation. Option D. Ignore the compliance team's concerns and proceed with the client's requested data handling procedure, as the client's insistence suggests it is a business necessity. The correct answer is B. Politely inform the potential client that Asseco cannot accommodate the requested data handling procedure due to regulatory noncompliance and offer to explore alternative, compliant methods to achieve their objectives. Explanation. This scenario presents a professional challenge because it requires an employee at Asseco to navigate a situation where a potential client's request might conflict with established regulatory requirements. The core of the challenge lies in balancing the company's business objectives with its legal and ethical obligations. A careful judgment is required to ensure that Asseco does not engage in practices that could lead to regulatory breaches, reputational damage, or legal repercussions. The correct approach involves clearly and politely explaining to the potential client that Asseco cannot fulfill the request as stated because it contravenes specific regulatory guidelines. This approach upholds Asseco's commitment to compliance and ethical conduct. Specifically, it demonstrates adherence to the principle of regulatory integrity, which mandates that all business activities must be conducted within the bounds of applicable laws and regulations. By refusing the non-compliant request and offering alternative, compliant solutions, Asseco protects itself and its client from potential future issues. An incorrect approach of agreeing to the client's request without qualification would be a significant regulatory and ethical failure. This would directly violate the principle of lawful conduct exposing Asseco to penalties and sanctions. Another incorrect approach, that of ignoring the request and proceeding with the engagement as if the request was never made, is also problematic. This demonstrates a lack of due diligence and a failure to address potential compliance risks proactively, which can be interpreted as a form of negligence. Finally, an approach that involves attempting to subtly circumvent the regulations to meet the client's request, even if not explicitly breaking the law, would be an ethical failure. This undermines the spirit of the regulations and could still lead to unintended negative consequences. Professionals should employ a decision-making framework that prioritizes understanding the regulatory landscape, identifying potential conflicts, and communicating transparently. When faced with a request that appears to be non-compliant, the first step is to thoroughly research and confirm the relevant regulations. If a conflict is identified, the next step is to communicate this clearly and professionally to the client, explaining the regulatory basis for the refusal. It is crucial to then offer compliant alternatives that still aim to meet the client's underlying business needs. This proactive and principled stance ensures both business continuity and regulatory adherence. Question 5. Process analysis reveals that a key client of Asseco has requested that a candidate they are sponsoring be fast-tracked through the hiring assessment process, bypassing certain standard evaluation stages due to an urgent project deadline. Asseco's internal guidelines, as implied by the Asseco Hiring Assessment Test Framework, emphasize a consistent and thorough evaluation for all candidates to ensure fairness and objectivity. What is the most appropriate course of action for Asseco in this situation? Option A. Escalate the request to a higher authority within Asseco without consulting the client or attempting to find a compliant solution, thereby deferring responsibility. Option B. Politely decline the client's request to bypass assessment stages, explaining that all candidates must undergo the full, standardized evaluation process to maintain fairness and integrity, and offer to expedite the standard process where possible within its defined parameters. Option C. Immediately proceed with the client's request to fast-track the candidate, prioritizing client satisfaction and the urgent project deadline over the standard assessment procedures. Option D. Inform the client that the request cannot be accommodated due to internal policy, but take no further action to communicate the rationale or explore alternative compliance solutions. The correct answer is B. Politely decline the client's request to bypass assessment stages, explaining that all candidates must undergo the full, standardized evaluation process to maintain fairness and integrity, and offer to expedite the standard process where possible within its defined parameters. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's explicit instructions and the regulatory obligations of Asseco, a firm operating under the Asseco Hiring Assessment Tests specified regulatory framework. The core difficulty lies in balancing client satisfaction with the paramount duty to adhere to legal and ethical standards. A professional must exercise sound judgment to navigate this tension without compromising integrity or compliance. The correct approach involves prioritizing regulatory compliance and ethical conduct over immediate client demands when those demands contravene established rules. This means Asseco must politely but firmly decline the client's request to bypass the standard onboarding procedure. The regulatory justification stems from the Asseco Hiring Assessment Test's implicit requirement for all candidates to undergo a fair and consistent evaluation process. Deviating from this process, even at a client's behest, could be interpreted as preferential treatment, a breach of fairness, and potentially a violation of internal assessment guidelines designed to ensure objectivity and prevent bias. Ethically, maintaining the integrity of the assessment process is crucial for building trust and ensuring that all candidates are evaluated on merit. An incorrect approach would be to accede to the client's request and expedite the onboarding without proper assessment. This failure would directly violate the spirit and likely the letter of the Asseco Hiring Assessment Test's guidelines, which are designed to ensure a standardized and equitable evaluation. Such an action could lead to accusations of favoritism, undermine the credibility of Asseco's hiring process, and potentially result in the assessment of unqualified candidates, which is detrimental to both the company and the integrity of the hiring market. Another incorrect approach would be to ignore the client's request and proceed with the standard process without any communication. While this upholds the assessment integrity, it fails to manage the client relationship effectively, Professionalism dictates clear communication and managing expectations. Ignoring a client's input, even if it cannot be accommodated, can lead to dissatisfaction and damage the professional relationship. The professional decision-making process in such situations should involve 1. Understanding the client's request and the underlying reason for it. 2. Identifying any potential conflicts with regulatory requirements, internal policies, or ethical principles. 3. If a conflict exists, clearly articulating the regulatory or ethical constraints to the client, explaining why the request cannot be fulfilled. 4. Proposing alternative solutions that are compliant and still aim to meet the client's underlying needs if possible. 5. Documenting the interaction and the decision made. Question 6. Process analysis reveals that a client of Asseco has requested a specific type of data processing that, while not explicitly forbidden, appears to tread close to the boundaries of data privacy regulations, as outlined in the Asseco hiring assessment test specified regulatory framework. The employee responsible for the client relationship is unsure if this processing activity fully complies. What is the most appropriate course of action for the Asseco employee? Option A. Independently research the relevant data privacy regulations and make a judgment call on whether the client's request is compliant. Option B. Consult with Asseco's internal compliance department to seek clarification and guidance on the regulatory implications of the requested data processing before proceeding. Option C. Immediately refuse the client's request to avoid any potential regulatory issues without further investigation or consultation. Option D. Proceed with the client's requested data processing, assuming it is permissible unless explicitly prohibited by the regulations. The correct answer is D. Proceed with the client's requested data processing, assuming it is permissible unless explicitly prohibited by the regulations. Explanation. This scenario presents a professional challenge because it requires an employee at Asseco to navigate a situation where a client's request, while seemingly straightforward, could potentially lead to a breach of regulatory requirements. The core of the challenge lies in balancing client service with strict adherence to compliance obligations. Careful judgment is required to identify the potential risks and determine the appropriate course of action without jeopardizing the business relationship or violating regulations. The correct approach involves proactively identifying the potential regulatory conflict and seeking clarification from the appropriate internal compliance department. This demonstrates a commitment to regulatory adherence and ethical conduct. By engaging with the compliance team, the employee ensures that Asseco's actions are fully aligned with the specified regulatory framework, thereby mitigating risk and upholding the company's integrity. This approach is justified by the fundamental principle of regulatory compliance, which mandates that all business activities must operate within the bounds of applicable laws and guidelines. An incorrect approach of directly fulfilling the client's request without further inquiry would be a significant regulatory and ethical failure. This bypasses the necessary due diligence and could expose Asseco to penalties, reputational damage, and legal repercussions if the request indeed violates regulations. Another incorrect approach, that of refusing the client outright without explanation or escalation, could damage the client relationship and might be seen as poor customer service, although it avoids immediate regulatory breach. However, it fails to explore compliance solutions. A third incorrect approach, attempting to interpret the regulations independently and proceed without consulting the compliance department, carries the risk of misinterpretation, leading to the same regulatory failures as directly fulfilling the request. Professionals should adopt a decision-making framework that prioritizes understanding the regulatory landscape before acting on client requests. This involves a four-step process. 1. Identify the request and its potential implications. 2. Assess for any potential conflicts with known regulations or internal policies. 3. If a conflict is suspected, escalate to the relevant internal expert, e.g., Compliance Department, for guidance. 4. Act only after receiving clear direction and confirmation of compliance. This systematic approach ensures that client needs are met responsibly and ethically within the established legal and regulatory boundaries. Question 7. Risk assessment procedures indicate that a key client of Asseco has requested a specific type of financial analysis that, upon review, appears to fall outside the scope of services Asseco is permitted to offer under the Asseco hiring assessment test's regulatory framework, potentially leading to a breach of conduct rules. Asseco's compliance department has flagged this as a high-risk request. Option A. Seek to interpret the Asseco hiring assessment test's regulatory framework in a manner that allows for the requested analysis, even if it requires a broad or unconventional interpretation. Option B. Inform the client that the requested analysis cannot be performed as it may contravene the Asseco hiring assessment test's regulatory framework, and propose alternative compliant analytical approaches. Option C. Proceed with the requested analysis, assuming the client's understanding of their needs outweighs the potential regulatory ambiguity. Option D. Decline the client's request outright without further explanation, citing internal policy. The correct answer is C. Proceed with the requested analysis, assuming the client's understanding of their needs outweighs the potential regulatory ambiguity. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's explicit instructions and the firm's regulatory obligations. Asseco, as a regulated entity, must prioritize compliance with the Asseco hiring assessment test's specified regulatory framework over client demands that could lead to non-compliance. The difficulty lies in navigating this conflict while maintaining client relationships and upholding professional integrity. The correct approach involves a thorough understanding of the Asseco hiring assessment test's regulatory framework and applying it to the situation. This means recognizing that the firm's duty to comply with its governing regulation supersedes any instruction from a client that would necessitate a breach of those regulations. The professional must then communicate this limitation to the client, explaining the regulatory constraints and proposing alternative compliance solutions. This demonstrates adherence to professional standards and regulatory requirements, safeguarding both the firm and the client from potential penalties. An incorrect approach would be to blindly follow the client's instructions without considering the regulatory implications. This failure to apply the Asseco hiring assessment test's regulatory framework would expose Asseco to significant risks, including regulatory sanctions, reputational damage, and potential legal liabilities. Another incorrect approach would be to ignore the client's request entirely without attempting to find a compliant solution or explain the limitations. This could damage the client relationship and suggest a lack of client service, even if it avoids direct regulatory breach. Finally, attempting to circumvent the regulations through a loophole or misinterpretation, even with the client's consent, is a serious ethical and regulatory failure. Professionals should employ a decision-making process that begins with identifying the relevant regulatory obligations under the Asseco hiring assessment test's framework. They should then assess the client's request against these obligations. If a conflict arises, the professional must prioritize compliance and engage in open, transparent communication with the client, explaining the regulatory constraints and collaboratively seeking compliant alternatives. This structured approach ensures that professional judgment is guided by regulatory requirements and ethical principles. Question 8. The evaluation methodology shows that Asseco is considering using historical client transaction data to identify patterns that could improve service delivery. What is the most appropriate regulatory compliant approach for Asseco to undertake this analysis? Option A. Conduct the analysis on raw, identifiable client transaction data, assuming internal use is permitted. Option B. Seek explicit, individual consent from every client whose data will be analyzed for this purpose. Option C. Anonymize or pseudonymize the client transaction data before conducting the analysis. Option D. Proceed with the analysis on raw data, relying solely on existing general IT security protocols. The correct answer is C. Anonymize or pseudonymize the client transaction data before conducting the analysis. Explanation. This scenario presents a professional challenge because Asseco, as a financial services firm, operates under stringent regulatory requirements designed to protect clients and market integrity. Core challenge lies in balancing the need for efficient internal operations and data analysis with the absolute imperative of client confidentiality and data privacy, as mandated by the relevant regulatory framework. Misinterpreting or inadequately applying these regulations can lead to severe consequences, including regulatory sanctions, reputational damage, and loss of client trust. Careful judgment is required to ensure that any data analysis, even for internal improvement purposes, does not inadvertently breach these fundamental obligations. The correct approach involves anonymizing or pseudonymizing client data before it is used for internal analysis. This method directly addresses the regulatory requirement to protect client information, while still allowing Asseco to gain insights from its operational data. Specifically, anonymization removes all personally identifiable information, rendering the data incapable of identifying an individual, while pseudonymization replaces identifying fields with artificial identifiers, allowing for re-identification only under specific, controlled circumstances. This adheres to principles of data minimization and purpose limitation, ensuring that client data is processed only for legitimate business purposes and with appropriate safeguards. The regulatory justification stems from data protection laws that mandate the protection of personal data and require organizations to implement technical and organizational measures to achieve this. An incorrect approach would be to conduct the analysis on raw, identifiable client data without any form of anonymization or pseudonymization. This directly violates data privacy regulations, as it exposes sensitive client information to potential misuse or unauthorized access, even within the company. The ethical failure lies in breaching the implicit trust clients place in Asseco to safeguard their personal and financial details. Another incorrect approach would be to assume that internal use of data automatically exempts Asseco from data protection obligations. Regulations typically apply to the processing of personal data regardless of the purpose, unless specific exemptions are clearly defined and met. Failing to implement appropriate safeguards based on this assumption would be a significant regulatory and ethical lapse. Finally, an incorrect approach would be to rely solely on general IT security measures without specific data anonymization or pseudonymization techniques. While general security is important, it does not inherently protect against the identification of individuals within datasets if the data itself remains identifiable. This approach fails to address the specific requirements for handling personal data in analytical contexts. The professional decision-making process for similar situations should involve a thorough understanding of the applicable regulatory framework, particularly concerning data protection and client confidentiality. Before undertaking any data analysis, professionals should 1. Identify the type of data being used and whether it constitutes personal data. 2. Assess the purpose of the analysis and its necessity. 3. Determine the most appropriate data protection measures, prioritizing anonymization or pseudonymization where feasible. 4. Consult with legal and compliance departments to ensure adherence to all regulatory requirements. 5. Document the process and the safeguards implemented. Question 9. Process analysis reveals that a long-standing client of Asseco, known for their consistent and straightforward financial dealings, has requested an immediate transfer of a substantial sum of funds from an overseas account to their Asseco account. The client's explanation for the sudden influx of funds is vague and unconvincing, stating it is a personal investment opportunity that requires swift action. Asseco's compliance team has noted that the source of these funds is from a jurisdiction with a high risk of money laundering, and that the client's usual transaction patterns do not align with this type of activity. What is the most appropriate course of action for Asseco to take in this situation, adhering strictly to UK regulatory framework and SISI guidelines? Option A. Immediately refuse the client's request and inform them that Asseco cannot facilitate this transaction due to the unusual nature of the funds. Option B. Report the client and the transaction directly to the National Crime Agency, NCA, without conducting any further internal assessment or consultation. Option C. Proceed with the transaction immediately as requested by the client to maintain a good client relationship, assuming the client's explanation is sufficient. Option D. Conduct a thorough internal review of the transaction and the client's profile, escalating any concerns to the designated compliance officer, or MLRO, for further investigation and guidance. The correct answer is D. Conduct a thorough internal review of the transaction and the client's profile, escalating any concerns to the designated compliance officer, or MLRO, for further investigation and guidance. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's explicit instructions and the regulatory obligations of Asseco, a financial services firm operating under UK regulations and SISI guidelines. The firm must navigate the delicate balance of client service while upholding its duty to prevent financial crime. The core of the challenge lies in identifying and acting upon potential red flags without unduly hindering legitimate business. The correct approach involves a thorough, documented internal review of the transaction and the client's profile, escalating concerns to the relevant compliance officer or MLRO, Money Laundering Reporting Officer, as per Asseco's internal policies and regulatory requirements. This is the most professionally sound and ethically defensible action because it directly addresses the potential for illicit activity by initiating a formal investigation. UK regulations, such as the Proceeds of Crime Act 2002, POCA, and the Money Laundering, Terrorist Financing and Transfer of Funds, Information on the Payer, Regulations 2017, MLR, mandate that financial institutions report suspicious activity. CISI guidelines further emphasize the importance of robust anti-money laundering (AML) and counter-terrorist financing (CTF) procedures, including the need for staff to be vigilant and to escalate concerns appropriately. By following this process, Asseco fulfills its legal and ethical obligations to report suspected money laundering or terrorist financing, thereby protecting the integrity of the financial system. Proceeding with the transaction without further investigation, despite the unusual nature of the funds and the client's vague explanation, represents a significant regulatory and ethical failure. This approach ignores potential red flags and could inadvertently facilitate financial crime, exposing Asseco to severe penalties, reputational damage, and legal repercussions under POCA and the MLRs. Directly refusing the client's instruction without a proper internal review and escalation also presents a professional challenge. While caution is warranted, an immediate refusal without due diligence could damage the client relationship and potentially be seen as an overreaction if the transaction is ultimately legitimate. However, the primary failure here would be the lack of adherence to the firm's established AML/CTF procedures, which require investigation before a definitive decision is made, immediately reporting the client to the National Crime Agency, NCA. Without completing an internal assessment and gathering further information would be premature and could constitute a breach of client confidentiality if the suspicion is unfounded. While reporting is a critical step, it must be based on a reasonable suspicion formed after internal due diligence, as outlined in the regulatory framework. The professional decision-making process in such situations should involve a structured approach. First, identify and document any potential red flags. Second, consult Asseco's internal AML/CTF policies and procedures. Third, conduct a thorough internal review, gathering additional information if possible and appropriate. Fourth, escalate concerns to the designated compliance personnel or MLRO. And finally, act upon their guidance, which will be informed by the regulatory requirements and the specific circumstances of the case. This systematic process ensures that decisions are not arbitrary, but are grounded in regulatory compliance and ethical considerations. Question 10. Process analysis reveals that hiring manager at Asseco, after reviewing candidate assessment results from the Asseco hiring assessment test, wishes to share these results with a colleague in another department to gain a second opinion on a candidate's technical aptitude. The hiring manager is considering forwarding the assessment reports via internal email. Which of the following actions best adheres to the regulatory framework, laws, and guidelines specified for the Asseco hiring assessment test? Option A. Uploading the assessment reports to a shared, unencrypted cloud storage folder accessible by the colleague. Option B. Forwarding the assessment reports to the colleague via internal email, as it is an approved internal communication channel. Option C. Sharing the assessment reports with the colleague by printing them and handing them over directly. Option D. Discussing the candidate's general strengths and weaknesses observed in the assessment verbally with the colleague, without sharing the actual reports. The correct answer is B. Forwarding the assessment reports to the colleague via internal email, as it is an approved internal communication channel. Explanation. This scenario presents a professional challenge because Asseco, as a financial services firm, operates under stringent regulatory oversight. The core of the challenge lies in balancing the need for efficient internal operations and client service with the absolute requirement to adhere to the Asseco hiring assessment test's specific regulatory framework, which dictates how candidate information must be handled. Misinterpreting or circumventing these guidelines, even with good intentions, can lead to serious compliance breaches, reputational damage, and potential penalties. Careful judgment is required to ensure all actions align with the established rules. The correct approach involves a thorough understanding and strict application of the Asseco hiring assessment tests regulatory framework regarding candidate data handling. This means ensuring that any communication or sharing of candidate information, including assessment results, is done exclusively through approved channels and in a manner that maintains data integrity and confidentiality as prescribed by the test's guidelines. This approach is correct because it directly addresses the primary objective of the assessment: to evaluate candidates fairly and securely within the defined regulatory boundaries. Adherence to these specific rules is paramount for maintaining the integrity of the hiring process and demonstrating Asseco's commitment to compliance. An incorrect approach would be to share candidate assessment results via informal or unapproved communication methods, such as personal email or unencrypted messaging platforms. This fails to comply with the Asseco hiring assessment test's regulatory framework by potentially exposing sensitive candidate data to unauthorized access or breaches, compromising confidentiality and data security. It also undermines the standardized and controlled nature of the assessment process. Another incorrect approach would be to retain candidate assessment results indefinitely without a clear retention policy aligned with the Asseco hiring assessment test's guidelines. This could lead to the accumulation of unnecessary personal data, increasing the risk of data breaches and violating data privacy principles that are often implicitly or explicitly part of such assessment frameworks. It also suggests a lack of diligent record management. A third incorrect approach would be to use candidate assessment results for purposes beyond the stated hiring objective without explicit consent or regulatory allowance. This violates the principle of data minimization and purpose limitation, which are fundamental to data protection regulations and ethical hiring practices. It could also lead to discriminatory practices if the data is used in ways not intended by the assessment. The professional decision-making process for similar situations should begin with a comprehensive review of all relevant regulatory documents and internal policies specific to the Asseco hiring assessment test. Before taking any action involving candidate data, professionals must ask: does this action strictly adhere to the Asseco hiring assessment test's guidelines for data handling, confidentiality, and usage? If there is any doubt, seeking clarification from the compliance department or a designated authority is essential. Prioritizing regulatory compliance and ethical conduct over expediency or convenience is a cornerstone of professional responsibility in regulated environments. Question 11. Governance review demonstrates that Asseco is planning to share anonymized candidate assessment data with an external analytics firm to identify trends in hiring success. The review highlights a potential risk of re-identification if the anonymization process is not sufficiently robust. Which of the following actions best addresses this risk while ensuring compliance with data privacy principles? Option A. Provide the analytics firm with a subset of the data that excludes names and contact information, but retains other potentially identifying demographic details. Option B. Share the data with the analytics firm with a strict non-disclosure agreement, assuming their internal processes will adequately protect the data. Option C. Implement a multi-layered anonymization process that includes data aggregation, generalization, and suppression of unique identifiers, and conduct a thorough re-identification risk assessment before data transfer. Option D. Rely on the analytics firm's assurance that they will only use the data for aggregated reporting and will not attempt to re-identify individuals. The correct answer is C. Implement a multi-layered anonymization process that includes data aggregation, generalization, and suppression of unique identifiers, and conduct a thorough re-identification risk assessment before data transfer. Explanation. This scenario presents a professional challenge because it requires balancing the company's operational needs with stringent regulatory compliance, specifically concerning data privacy and security. The Asseco hiring assessment test context implies a need to demonstrate understanding of how to handle sensitive information in a compliant manner. Careful judgment is required to ensure that any data handling practices do not violate the specified regulatory framework, which in this case is assumed to be the Asseco hiring assessment test's internal guidelines and any applicable data protection laws relevant to its operations. The correct approach involves implementing robust data anonymization techniques before sharing any data for analysis. This aligns with the principle of data minimization and privacy by design, ensuring that personal identifiers are removed or sufficiently obscured to prevent re-identification. This approach is ethically sound and regulatorily compliant because it directly addresses the risk of unauthorized access or disclosure of personal candidate information, thereby upholding the trust placed in Asseco by its applicants and adhering to data protection principles. An incorrect approach that involves sharing raw, identifiable candidate data for analysis poses significant regulatory and ethical failures, directly violates data privacy principles by exposing sensitive personal information without adequate safeguards, increasing the risk of data breaches and potential misuse. This could lead to severe reputational damage for Asseco and potential legal repercussions. Another incorrect approach, which is to rely solely on verbal assurances from the analysis team without documented procedures for data handling, is also flawed. This lacks accountability and verifiable compliance, leaving Asseco vulnerable to breaches of its data protection policies and applicable regulations. It fails to establish a clear audit trail and demonstrates a lack of due diligence in ensuring data security. Professionals should adopt a decision-making framework that prioritizes regulatory adherence and ethical conduct. This involves proactively identifying potential risks associated with data handling, consulting relevant policies and regulations, and implementing appropriate controls. When in doubt, seeking clarification from legal or compliance departments is crucial. The process should involve a risk-based assessment of data sharing activities, ensuring that the benefits of data analysis are weighed against the potential risks to data privacy and security, and that the least intrusive methods are employed. Question 12. Upon reviewing a hypothetical client scenario during the Asseco hiring assessment test, a candidate is asked to provide an opinion that, while seemingly beneficial to the client's immediate goals, appears to subtly circumvent a core principle of the Asseco hiring assessment test regulatory framework regarding data handling. What is the most appropriate course of action for the candidate to take? Option A. Politely decline to provide the opinion, explaining that the Asseco hiring assessment test's regulatory framework restricts such advice and offering to explore compliant alternatives. Option B. Attempt to rephrase the opinion in a way that superficially appears compliant but still achieves the client's underlying objective, relying on the client's interpretation. Option C. Ignore the client's request and proceed with a standard, unrelated response to demonstrate adherence to the Asseco hiring assessment test's general guidelines. Option D. Provide the opinion as requested by the client, assuming the client understands the potential implications and that the Asseco hiring assessment test's framework is flexible in practice. Correct answer is A. Politely decline to provide the opinion, explaining that the Asseco hiring assessment test's regulatory framework restricts such advice and offering to explore compliant alternatives. Explanation. This scenario presents a professional challenge for an Asseco employee due to the inherent conflict between client demands and regulatory obligations. The core difficulty lies in balancing the need to maintain client relationships and deliver services with the absolute requirement to adhere to the Asseco hiring assessment test's specified regulatory framework. Misinterpreting or circumventing these regulations, even with good intentions or under client pressure, can lead to significant compliance breaches, reputational damage, and potential disciplinary action. Careful judgment is required to identify the boundaries of acceptable practice and to communicate effectively with clients about these limitations. The correct approach involves prioritizing the Asseco hiring assessment test regulatory framework above all else. This means understanding that the assessment's guidelines are non-negotiable and form the basis of professional conduct within the context of the test. When faced with a situation where a client's request appears to conflict with these guidelines, the professional response is to politely but firmly explain the limitations imposed by the regulatory framework. This demonstrates integrity, a commitment to compliance, and a clear understanding of professional responsibilities. Specifically, adhering to the Asseco hiring assessment test jurisdiction means that any advice or action taken must be strictly within the scope defined by its rules, without external influence or interpretation that deviates from its intent. An incorrect approach would be to attempt to satisfy the client's request by bending or reinterpreting the Asseco hiring assessment test's regulatory framework. This could manifest as providing advice that, while seemingly helpful to the client, subtly violates the spirit or letter of the assessment's guidelines. Such an action represents a failure to uphold the integrity of the assessment process and a disregard for the established rules. Another incorrect approach would be to ignore the client's request entirely without explanation, which, while compliant, demonstrates poor client management and a lack of professional communication skills. A third incorrect approach might involve seeking to find loopholes or ambiguities in the Asseco hiring assessment test framework to accommodate the client, which still undermines the principle of strict adherence and can lead to unintended compliance issues. The professional decision-making process in such situations should involve a clear understanding of the Asseco hiring assessment test's regulatory framework. When a conflict arises, the professional should first identify the specific guideline or rule that is potentially being challenged. Then, they should assess the direct implications of complying with the client's request versus adhering to the framework. The next step is to communicate clearly and professionally with the client, explaining the constraints imposed by the Asseco hiring assessment test's regulations and offering alternative solutions that remain within the compliant boundaries. This process emphasizes transparency, integrity, and a commitment to the established professional standards. Question 13. Quality control measures reveal that a new data processing workflow implemented by Asseco for candidate assessment data appears to streamline operations, but may involve the storage of sensitive personal information in a less secure manner than previously mandated by internal guidelines and potentially external data protection regulations. Option A. Continue using the new workflow as it is more efficient, and address any potential data privacy concerns only if a formal complaint is received. Option B. Inform the candidates that their data is being processed under a new, more efficient system, without detailing the specific security measures in place. Option C. Conduct a comprehensive review of the new workflow against Asseco's internal data handling policies and applicable data protection regulations to identify specific areas of non-compliance and implement necessary adjustments to ensure data security and privacy. Option D. Immediately revert to the previous data processing workflow without further investigation, assuming the new process is inherently non-compliant. The correct answer is C. Conduct a comprehensive review of the new workflow against Asseco's internal data handling policies and applicable data protection regulations to identify specific areas of non-compliance and implement necessary adjustments to ensure data security and privacy. Explanation. This scenario presents a professional challenge because it requires an employee at Asseco to navigate potential conflicts between internal company policies and external regulatory requirements, specifically concerning data privacy and client confidentiality. The challenge lies in identifying and rectifying a situation where a process, while seemingly efficient, may inadvertently breach regulatory obligations. Careful judgment is required to ensure that Asseco's operations remain compliant and uphold client trust. The correct approach involves a thorough review of the data handling process against the relevant regulatory framework, which in this context, for a hiring assessment test, would typically align with general data protection principles and any specific guidelines implied by the assessment's jurisdiction, e.g., GDPR if the assessment is EU-focused, or similar principles if a different jurisdiction is implied. This approach prioritizes compliance by seeking to understand the exact nature of the data being processed, its sensitivity, and the legal basis for its collection and storage. It then involves implementing controls that align with these regulations, such as anonymization or pseudonymization where appropriate, and ensuring that data retention policies are strictly adhered to. This is ethically and regulatorily sound, because it places the protection of personal data and client confidentiality at the forefront, minimizing the risk of breaches and associated penalties. An incorrect approach that involves continuing the current process without investigation fails to acknowledge the potential for non-compliance. This is a significant regulatory and ethical failure, as it demonstrates a disregard for data protection laws and client privacy, potentially exposing Asseco to legal repercussions and reputational damage. Another incorrect approach, which is to immediately halt all data processing without understanding the specifics, is also professionally unsound. While it errs on the side of caution, it can disrupt legitimate business operations and may not be necessary if the current process can be easily brought into compliance with minor adjustments. This demonstrates a lack of nuanced understanding of regulatory requirements and an inefficient problem-solving methodology. Professionals should adopt a structured decision-making process when encountering such quality control findings. This involves 1. Understanding the specific regulatory requirements applicable to the data and the process. 2. Assessing the current process against these requirements to identify any discrepancies. 3. Evaluating the impact of any identified discrepancies. 4. Developing and implementing corrective actions that are proportionate and effective in achieving compliance. 5. Documenting the findings, actions taken, and outcomes for audit and future reference. This systematic approach ensures that issues are addressed effectively, compliantly, and with minimal disruption to business operations. Question 14. The control framework reveals that a long-standing client of Asseco has requested a specific transaction that, while appearing to be a standard business practice, raises concerns about potential circumvention of anti-money laundering reporting thresholds. The client has emphasized the urgency and discretion required for this transaction. What is the most appropriate course of action for the Asseco representative handling this request? Option A. Immediately execute the transaction to meet the client's urgent needs, and then internally flag the transaction for review by the compliance department. Option B. Politely decline the transaction, citing internal policy limitations without providing specific details to the client, and suggest alternative compliant methods if available. Option C. Proceed with the transaction as requested, ensuring all client confidentiality is maintained, given the client's long-standing relationship and emphasis on discretion. Option D. Document the client's request and the concerns raised. Then escalate the matter to Asseco's compliance and legal departments for guidance before taking any action. The correct answer is C. Proceed with the transaction as requested, ensuring all client confidentiality is maintained, given the client's long-standing relationship and emphasis on discretion. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's request and the company's ethical and regulatory obligations. Asseco, like any financial services firm, operates under a strict regulatory environment designed to protect investors and maintain market integrity. The challenge lies in balancing client service with compliance, ensuring that no action taken, even at a client's behest, violates these fundamental principles. Careful judgment is required to identify and navigate situations where a client's instructions might lead to non-compliance or unethical conduct. The correct approach involves a thorough understanding of Asseco's internal policies, the relevant regulatory framework, which for this assessment is assumed to be the UK Regulatory Framework and SISI guidelines, and ethical principles. It requires proactively identifying potential conflicts or breaches, documenting the situation, and seeking guidance from appropriate internal departments such as compliance or legal. This ensures that Asseco acts responsibly, upholds its regulatory duties, and protects both itself and its clients from potential harm or sanctions. Specifically, under UK regulations and SISI guidelines, firms have a duty to act honestly, with integrity, and with due skill, care, and diligence. They must also comply with all applicable laws and regulations, and maintain adequate systems and controls to prevent financial crime. An incorrect approach of directly fulfilling the client's request without further scrutiny would be a significant regulatory and ethical failure. This would demonstrate a lack of due diligence and a disregard for Asseco's compliance obligations, potentially exposing the firm to fines, reputational damage, and disciplinary action from regulators. Another incorrect approach of ignoring the request and hoping it goes away is also professionally unacceptable. This passive stance fails to address a potential issue, leaving Asseco vulnerable and demonstrating a lack of proactive risk management. Finally, an approach that involves attempting to subtly circumvent regulations to satisfy the client would be a direct violation of ethical conduct and regulatory requirements, indicating a willingness to engage in dishonest practices. Professionals should adopt a decision-making framework that prioritizes regulatory adherence and ethical conduct. This involves 1. Identifying the issue, recognizing when a client's request might conflict with policies or regulations. 2. Information gathering, understanding the specifics of the request and its potential implications. 3. Risk assessment, evaluating the regulatory, legal, and ethical risks associated with fulfilling or not fulfilling the request. 4. Consultation, seeking advice from compliance, legal, or senior management. 5. Documentation, maintaining a clear record of the situation, discussions, and decisions. 6. Action, implementing the agreed-upon course of action, which may involve explaining limitations to the client and offering compliant alternatives. Question 15. Examination of the data shows that a client has requested access to specific performance metrics and candidate feedback collected during the Asseco hiring assessment test for a cohort of candidates they sponsored. Asseco's internal policy, aligned with the Asseco hiring assessment test's regulatory framework, mandates strict data anonymization and requires explicit candidate consent for any data sharing beyond internal assessment purposes. The client, however, is pushing for direct access to raw, identifiable feedback to understand the assessment's nuances. Option A. Grant the client direct access to the raw, identifiable feedback as requested, assuming their intent is to improve their understanding of the assessment process. Option B. Refuse the client's request outright without providing any explanation or alternative solutions, citing general confidentiality concerns. Option C. Provide the client with anonymized aggregate data and a summary report, explaining that direct access to identifiable feedback is restricted by Asseco's data privacy policy and the Asseco hiring assessment test's regulatory framework, while offering to discuss the findings in a consultative manner. Option D. Attempt to de-identify the feedback by removing obvious personal identifiers, but still provide the client with the modified feedback data. The correct answer is C. Provide the client with anonymized aggregate data and a summary report, explaining that direct access to identifiable feedback is restricted by Asseco's data privacy policy and the Asseco hiring assessment test's regulatory framework, while offering to discuss the findings in a consultative manner. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's request and the regulatory obligations of Asseco. The need for careful judgment arises from balancing client satisfaction with the imperative to adhere to the Asseco hiring assessment test's regulatory framework, which likely emphasizes data privacy and integrity. The correct approach involves a thorough review of the Asseco hiring assessment test's specific guidelines regarding data handling and client access. This approach is professionally sound because it prioritizes compliance with the established regulatory framework. By seeking clarification and adhering strictly to the documented procedures, Asseco demonstrates its commitment to data protection principles and ethical conduct, thereby safeguarding both client confidentiality and its own regulatory standing. An incorrect approach of directly providing the requested data without proper authorization or adherence to internal protocols would constitute a significant regulatory failure. This would violate principles of data privacy and potentially breach confidentiality agreements, exposing Asseco to reputational damage and regulatory penalties. Another incorrect approach, that of outright refusal without explanation or offering alternative compliance solutions, could damage the client relationship and fail to uphold Asseco's commitment to client service within regulatory boundaries. A third incorrect approach, attempting to anonymize the data in a superficial manner that still allows for re-identification, would be a direct contravention of data protection laws and ethical standards, as it would not genuinely protect the sensitive information. Professionals should adopt a decision-making framework that begins with understanding the specific regulatory requirements applicable to the situation. This involves consulting internal policies, relevant laws, and ethical codes. When faced with a request that appears to conflict with these guidelines, the next step is to seek clarification from appropriate internal channels or supervisors. If the request remains problematic, the professional should clearly communicate the limitations imposed by regulations and explore alternative, compliant solutions that can still meet the client's underlying needs. Question 16. Assessment of an employee at Asseco who is in a role with access to sensitive client information has been actively trading shares of a company that is a significant client of Asseco. The employee has not informed Asseco's compliance department about these personal trades. What is the most appropriate course of action for the employee to take immediately? Option A. Cease all personal trading activity until a formal policy review is completed by Asseco. Option B. Immediately disclose all personal trading activity to Asseco's compliance department for review. Option C. Seek advice from a senior colleague in a different department about the potential implications. Option D. Continue trading as it is a personal investment and not directly related to their work at Asseco. The correct answer is B. Immediately disclose all personal trading activity to Asseco's compliance department for review. Explanation. Scenario analysis. This scenario presents a common challenge in financial services, where an employee's personal financial activities could potentially conflict with their professional duties or create reputational risk for their employer, Asseco. The challenge lies in balancing an individual's right to privacy and personal investment with the firm's obligation to maintain market integrity, prevent insider dealing, and uphold client trust. Strict adherence to Asseco's internal policies and relevant regulatory guidelines is paramount to avoid breaches. Correct approach analysis. The correct approach involves proactively disclosing the personal trading activity to the compliance department. This aligns with Asseco's internal policies, which likely mandate reporting of personal investments by employees, especially those in sensitive roles. Regulatory frameworks, such as those governing financial markets, often require firms to have robust policies to prevent conflicts of interest and insider trading. By disclosing, the employee initiates a process where Asseco's compliance team can assess the situation, determine if any conflict exists, and implement appropriate controls or restrictions if necessary. This demonstrates a commitment to transparency and regulatory compliance, safeguarding both the employee and the firm. Incorrect approaches analysis. Failing to disclose the personal trading activity to the compliance department is a significant regulatory and ethical failure. It violates Asseco's internal policies and potentially breaches regulations designed to prevent insider trading and market manipulation. This lack of transparency creates an environment where conflicts of interest can go undetected, leading to severe consequences for both the individual and the firm, including fines and reputational damage. Proceeding with the personal trading without considering Asseco's policies or regulatory implications is also professionally unacceptable. It shows a disregard for the established compliance framework and the potential risks involved. This approach prioritizes personal gain over professional responsibility and regulatory adherence, which is a direct contravention of expected conduct in the financial services industry. Seeking advice from a colleague outside the compliance department, while potentially well-intentioned, is an insufficient and risky approach. Colleagues may not have the full understanding of Asseco's specific policies or the nuances of regulatory requirements. Relying on informal advice can lead to misinterpretations and noncompliance, failing to provide the necessary formal review and approval that only the compliance department can offer. Professional reasoning. Professionals in the financial services industry must adopt a proactive and transparent approach to compliance. When faced with a situation that might involve a conflict of interest or a potential breach of regulations, the primary step should always be to consult and report to the designated compliance department. This ensures that all actions are reviewed against internal policies and external regulatory requirements, allowing for informed decision-making and the implementation of necessary safeguards. This process protects the integrity of the firm and its clients, while also providing a clear framework for employee conduct. Question 17. Which approach would be most appropriate for Asseco to ensure compliance when developing a new internal analytics platform that requires the use of anonymized client data? Option A. Delay the development and implementation of the analytics platform until a definitive and universally accepted standard for anonymization is established. Option B. Proceed with anonymizing the data based on the interpretation provided by Asseco's internal legal counsel, assuming their advice is sufficient. Option C. Utilize the client data for internal analytics without anonymization, relying on the argument that the data is for internal use only and not shared externally. Option D. Proactively seek clarification from the relevant regulatory body regarding the interpretation of data anonymization requirements for client data used in internal analytics. The correct answer is D. Proactively seek clarification from the relevant regulatory body regarding the interpretation of data anonymization requirements for client data used in internal analytics. Explanation. This scenario presents a professional challenge because Asseco, as a financial services firm, operates under stringent regulatory oversight. The core difficulty lies in balancing the need for efficient data processing and client service with the absolute imperative of adhering to data protection and privacy laws. Misinterpreting or inadequately implementing these regulations can lead to severe penalties, reputational damage, and loss of client trust. Careful judgment is required to ensure that all data handling practices are compliant, transparent, and secure. The correct approach involves proactively seeking clarification from the relevant regulatory body Regarding the interpretation of data anonymization requirements for client data used in internal analytics, this demonstrates a commitment to regulatory compliance and a responsible approach to data handling. Specifically, it aligns with the principles of data minimization and purpose limitation often found in data protection frameworks, ensuring that Asseco only uses data in ways that are legally permissible and for which consent or a legitimate basis exists. By engaging directly with the regulator, Asseco seeks definitive guidance, thereby mitigating the risk of noncompliance and fostering a culture of adherence to legal standards. An approach that involves proceeding with the anonymization based on internal legal counsel's interpretation without seeking regulatory confirmation carries a significant risk. While internal legal advice is valuable, it may not always capture the nuances of regulatory intent or future interpretations. This could lead to a breach of data protection regulations if the anonymization methods are deemed insufficient by the regulator. Another incorrect approach would be to delay the analytics project indefinitely due to uncertainty. While caution is understandable, an indefinite delay hinders business operations and innovation without resolving the underlying compliance issue. It fails to address the need for a compliant solution and can be seen as an abdication of responsibility. Finally, an approach that involves using the data without any form of anonymization or seeking clarification would be a clear violation of data protection principles and regulations. This would expose Asseco to substantial legal and financial repercussions, as well as severe reputational damage. Professionals should adopt a framework that prioritizes understanding and adherence to regulatory requirements. This involves a proactive stance, identifying potential compliance gaps, consulting with legal and compliance experts, and when ambiguity exists, seeking direct clarification from the relevant regulatory authorities before implementing new processes or technologies that handle sensitive data. Question 18. Implementation of a new trading strategy by a key client of Asseco has resulted in a series of transactions that appear to be unusually large and timed to coincide with significant market news releases. An Asseco employee, responsible for monitoring client activity, suspects this activity may constitute market abuse. What is the most appropriate course of action for the Asseco employee to take? Option A. Discuss the suspicious activity with other colleagues in the trading department to gauge their opinions. Option B. Contact the client directly to seek clarification on the rationale behind the trading strategy. Option C. Immediately report the suspicious trading activity through Asseco's internal compliance reporting channels. Option D. Ignore the activity, assuming the client is acting within their rights and Asseco is not liable. The correct answer is C. Immediately report the suspicious trading activity through Asseco's internal compliance reporting channels. Explanation. This scenario presents a professional challenge for Asseco employees due to the inherent conflict between client confidentiality and the need to report potential regulatory breaches. Navigating this requires a deep understanding of Asseco's internal policies, relevant regulatory frameworks, and ethical obligations. The core difficulty lies in balancing the duty to protect client information with the imperative to uphold market integrity and comply with legal requirements. The correct approach involves a structured, confidential escalation process. This means immediately reporting the observed suspicious activity through the designated internal channels at Asseco, such as the compliance department or a specific whistleblowing hotline. This approach is correct because it adheres to regulatory mandates that require financial institutions and their employees to report suspicious activities that may indicate market abuse or financial crime. It also aligns with Asseco's internal compliance policies, which are designed to ensure adherence to these regulations. By using the established internal reporting mechanisms, the employee ensures that the information is handled by trained professionals who can assess the situation, conduct further investigation if necessary, and make an appropriate report to the relevant regulatory authorities without compromising client confidentiality unnecessarily or prematurely. This process protects both the employee from potential repercussions and the firm from regulatory penalties. An incorrect approach would be to ignore the suspicious activity. This is a significant regulatory and ethical failure because it directly contravenes the duty to report. Failing to report can lead to severe penalties for both the individual employee and Asseco, including fines and reputational damage. It also undermines the integrity of the financial markets by allowing potential illicit activities to go unchecked. Another incorrect approach would be to directly contact the client to inquire about the suspicious activity. This is a critical error as it breaches client confidentiality and could tip off the client, allowing them to conceal or destroy evidence, thereby obstructing any potential investigation by regulatory bodies. This action also bypasses Asseco's internal compliance procedures, creating a risk of mishandling sensitive information and potentially exposing Asseco to further regulatory scrutiny. A third incorrect approach would be to discuss the suspicious activity with colleagues who are not part of the designated compliance or reporting team. This constitutes a breach of confidentiality and could lead to the unauthorized dissemination of sensitive information, potentially causing reputational harm to the client and Asseco, and could also be interpreted as an attempt to circumvent official reporting channels. Professionals should adopt a decision-making framework that prioritizes adherence to established compliance procedures. When encountering potentially suspicious activity, the first step is always to consult Asseco's internal policies and procedures for reporting such matters. If unsure, seeking guidance from the compliance department is paramount. The focus should be on reporting through the correct channels, ensuring that all actions are documented, and maintaining strict confidentiality throughout the process. This systematic approach ensures that regulatory obligations are met, ethical standards are upheld, and the integrity of Asseco's operations and the financial markets is protected. Question 19. Process analysis reveals that a client of Asseco has requested access to specific candidate assessment data that, while not explicitly prohibited by general data privacy principles, may fall under a restricted category according to the Asseco hiring assessment test's internal guidelines. The employee is unsure if providing this data directly to the client would violate any specific provisions of the Asseco hiring assessment test's regulatory framework. Option A. Immediately provide the requested data to the client, assuming that if it's not explicitly forbidden, it is permissible. Option B. Escalate the request to Asseco's internal compliance department for guidance on the specific regulatory implications under the Asseco hiring assessment test framework before responding to the client. Option C. Attempt to interpret the Asseco hiring assessment test's regulatory framework independently to determine if the data can be shared. Option D. Inform the client that the data cannot be provided due to potential privacy concerns without further investigation. The correct answer is A. Immediately provide the requested data to the client, assuming that if it's not explicitly forbidden, it is permissible. Explanation. This scenario presents a professional challenge because it requires an employee at Asseco to navigate a situation where a client's request, while seemingly straightforward, could potentially lead to a breach of regulatory requirements. The core of the challenge lies in balancing client service with strict adherence to compliance obligations. Careful judgment is required to identify the potential risks and to respond in a manner that upholds both the company's integrity and regulatory standing. The correct approach involves proactively identifying the potential regulatory conflict and seeking clarification from the appropriate internal compliance department before proceeding. This demonstrates a commitment to regulatory adherence and ethical conduct. Specifically, by engaging with the compliance team, the employee ensures that Asseco's actions will align with the Asseco hiring assessment test's stipulated regulatory framework. This proactive step prevents potential violations, protects the company from penalties, and maintains client trust through transparent and compliant engagement. An incorrect approach would be to fulfill the client's request without considering the potential regulatory implications. This could lead to a violation of the Asseco hiring assessment test's guidelines, resulting in disciplinary action, reputational damage, and potential legal consequences for Asseco. Another incorrect approach would be to ignore the request or provide a dismissive response, which would be unprofessional and detrimental to the client relationship, while also failing to address the underlying compliance concern. Finally, attempting to interpret and apply complex regulatory requirements independently without consulting the designated compliance experts is risky and can lead to misinterpretations and subsequent noncompliance. Professionals should adopt a decision-making framework that prioritizes understanding and adherence to the specific regulatory framework governing their work. This involves a continuous learning process about relevant laws and guidelines, a willingness to seek expert advice when faced with ambiguity, and a commitment to escalating potential compliance issues to the appropriate internal channels. The principle of when in doubt, ask is paramount in maintaining a compliant and ethical professional practice. Question 20. During the evaluation of a new candidate onboarding process for Asseco, a potential gap is identified regarding the secure storage of sensitive personal data collected during the assessment. The current internal guidelines are vague on the specific encryption standards required for this type of data. What is the most appropriate course of action to ensure compliance with the Asseco hiring assessment tests regulatory framework? Option A. Immediately implement a widely recognized industry-standard encryption protocol for all sensitive data, assuming it meets general security best practices. Option B. Rely on the hiring manager's understanding of data security to determine the appropriate encryption methods for their respective teams. Option C. Consult the Asseco compliance officer and legal department to obtain clarification on the specific regulatory requirements and approved methods for data encryption, and await their guidance before proceeding. Option D. Develop and implement a new proprietary encryption method that the IT department believes offers superior security. Correct answer is A. Immediately implement a widely recognized industry-standard encryption protocol for all sensitive data, assuming it meets general security best practices. Explanation. This scenario presents a professional challenge because it requires balancing the company's operational needs with the stringent regulatory requirements of the Asseco hiring assessment tests jurisdiction. The core difficulty lies in interpreting and applying the specific compliance guidelines without overstepping boundaries or creating new, unauthorized procedures. A careful judgment is needed to ensure that any proposed solution is both effective and fully compliant. The correct approach involves a thorough review of existing, approved compliance documentation and seeking clarification from the designated compliance officer or legal department. This is the professionally sound method because it adheres strictly to the established regulatory framework and internal policies governing the Asseco hiring assessment test. It ensures that any actions taken are authorized, documented, and align with the company's commitment to regulatory compliance. This approach prioritizes adherence to the letter and spirit of the law and internal guidelines, minimizing risk. An incorrect approach of implementing a new, unapproved data handling procedure would be a significant regulatory and ethical failure. It bypasses the established channels for policy development and approval, potentially violating data privacy laws and internal security protocols. This creates a direct risk of noncompliance, leading to potential fines, reputational damage, and legal repercussions for Asseco. Another incorrect approach of relying solely on anecdotal evidence or industry best practices without explicit regulatory approval is also professionally unacceptable. While industry practices can be informative, they do not supersede the specific requirements of the Asseco hiring assessment test's jurisdiction. This approach risks misinterpreting or ignoring critical jurisdiction-specific nuances, leading to noncompliance. The professional decision-making process for similar situations should involve a systematic approach. 1. Identify the core compliance issue. 2. Consult the relevant regulatory framework and internal policies specific to the Asseco hiring assessment test. 3. If ambiguity exists, escalate the issue to the appropriate compliance or legal authority within Asseco. 4. Document all communications and decisions made. 5. Implement solutions only after they have been formally approved and are demonstrably compliant.